4.6%. Joining us in studio this afternoon is statistician Eswatini, who will unpack the factors behind the decline in inflation and share what can be expected in the next months. Then later on our final segment, Toba will join us today for a look at today's market analysis.
Then on my end, the African Continental Free Trade Area, AfCFTA, is aimed at creating a single market of more than 1.4 billion people with a combined GDP exceeding $3 trillion. Now, to support this vision, the AfCFTA Secretariat recently completed an investment gap analysis across a number of African countries, including the Kingdom of Eswatini. The findings indicate challenges in strengthening institutions, improving coordination and digitalizing services, among others. We will speak to the Eswatini Investment Promotion Authority on this because the primary fact is that if one country modernizes its investment framework while others lag behind, investors will continue to face fragmented systems that undermine the very objective of a single African market. Excuse me on that one. And also on the program, despite the world economy grappling with trade uncertainty, geopolitical tensions, and the growing impact of climate change, Eswatini's sugar industry has defied the odds. The sector has recorded 8 billion emalangeni in revenue for the past financial year, up from 7.7 billion emalangeni the previous year. CEO of Eswatini Sugar will weigh in on the drivers behind this performance. Now, those are just two of the interesting conversations that we're going to have here on the show. Let's go for a break. After this, our business news.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Welcome back. You're tuned into Nedbank Business Watch, and now for our business news.
Let's kick things off with this one, shall we? The Minister for Finance, Honorable Nedbank, says the admission of the Eswatini Financial Intelligence Center, EFIC, into the Egmont Group of Financial Intelligence Units enhances the country's image, particularly within international financial institutions. Honorable Nedbank shared these sentiments during an interview.
We've been working on it for years, by the way, and they're very strict before they allow you in. So they really look at huge amounts of criteria and really make sure that your information is secure. And the reason why they make the information is secure is because Egmont is about sharing information. It's so that, let's say, an investor comes here from Egypt, or whatever the example is, so that we can then talk to the financial intelligence unit in Egypt and verify if this investor is good, his finances are held, the KYCs are in place. And so before other countries allow you to have information, they wanted to make sure that information is secure. And as you know, we had those leaks a few years ago, and that was one of the delays, is that people need to make sure that we're not going to have a leak again. We've put things in place to make sure we don't have these kind of leaks, and now we believe that things are secure, and Egmont is now confirming that. And so Egmont is like a sharing platform. Obviously, we're part of the regulators is still a FATF, and under that is a Salmalug, which the Eastern and Southern African Anti-Money Laundering Unit that we fall under. We're part of that team. We do the verification there, and we've got to also make sure we don't get grey listed there. But this Egmont is about sharing information. And so yes, we're very proud as a country, and it's a lovely big step in the right direction. All of these things absolutely do help with the country's image. So the more our country is part of all of these organizations that the world sees as transparency, as good governance, as information being kept with integrity, it all helps in ultimately our country being open to the rest of the world. And so at the moment, we are doing better and better in that space. One will notice that there's more and more international banks wanting to transact in Eswatini, wanting to loan money to Eswatini, wanting to loan money to our private sector. And that's really going to ultimately help with our GDP growth. And the GDP growth help with employing people, which is our main objective as government right now. So yes, even though it's a small step, but it definitely is a step in the right direction towards the bigger goal.
The annual inflation rate for June this year stood at 2.6%, which is 0.1% points lower than 2.7% recorded in May. And according to the Consumer Price Index report released by the Central Statistical Office, the 2.6 inflation rate recorded in June this year is also a 0.3% percentage points lower than 2.9% recorded in June last year. We are now joined by Bongmenzi Eswatini, a statistician who unpacked the factors behind the decline in inflation and share what can be expected in the months ahead. Mr. Eswatini, very good afternoon. Thank you for joining us on Nedbank Business Watch. So what were the main contributors to inflation in June 2026?
Afternoon, Ru. Afternoon to the viewers. Thank you for hosting us. It's very important for the office and the country to have us here. So, well, we have noted a 2.6% inflation for the month of June. If we are looking at the analysis, you can note that we have food inflation, which is still negative. So it's more like balances what we would expect to be more than the 2.6. But according to us, weight is the second largest weight in the overall. So what happens there will impact on the overall inflation for the nation. So because it's negative, so also has that power to say to stabilize or even lower the inflation rate. But also looking across the other categories, it's not just the weight of food, but the others also compared on year-on-year basis. You would see that now there is a lower inflation rate compared to, say, the June last year, because when you're reporting on inflation, we record it on year-on-year. Yeah. So have those two are the main contributors to the slight decrease of to 2.6%. Though one would ask that we have noted for the month of June an increase in fuel, but mainly diesel and paraffin prices were much lower. Then it's only petrol which increased. So for that, it counterbalanced itself, but you can note that, okay, we are not on a decline yet, as you would expect. So we will be watching on that going forward. But what we can note, I think, from the perspective of us as a statistician, as you mentioned, what would we expect going forward? So normally we take into account what is happening globally, but it does not normally affect our compilation up until we collect the prices. Then after that, we can safely say if the prices had increased, then it will be translated into a compilation, then to the report, hence the change in the inflation rate. But for us, we monitor the prices on the pump. So as to report what is happening on the ground, though we are noting what is happening globally.
Yeah. So which income groups and essential items were hard hit by the June inflation?
Okay. Normally when you talk of maybe, I've talked of food, which it has not been hit hard. At the moment, has been a benefit still because it's still negative. But there hasn't been much. It's just that the prices of fuel have been increasing until June, where there's been that change, like downward trend in some, but one remained on an increase. I think for us, this month of June hasn't been hit hard, so we cannot safely say, okay, consumers have been hit hard on this, because remember, it's a decline, it's not an increase in the overall. Yeah.
Yeah, so as you said, we shall wait and see if inflation rises, goes down, or stabilizes in the coming months.
Okay, I think for the analysts, they'll be much more interested in saying, okay, what is happening now, what will happen in the future? So for us, we are like, okay, what has been analyzed versus what is the situation on the ground. We normally say collect the data that will say this is the situation on the ground, despite economists and analysts, what they do is for them to say what would they expect, what to predict the future. That is what they do. But for us as the Central Statistical Office, we just present the figures as they are. We just show the situation on the ground at that particular moment in time.
All right, thank you, Mr. Zwane, for that analysis. Well, there you have it. We've come to the end of our business news. Thank you for staying with us. This is Nedbank Business Watch. After the break, Notsile speaks to Eswatini Investment Promotion Authority. Stay with us.
Welcome back. You're still watching Nedbank Business Watch, and moving on with the program. The findings of a recently completed investment gap analysis across a number of African countries show that while many countries have made significant strides in developing investment laws and establishing investment promotion agencies, the challenge lies in implementing those reforms and creating a seamless investment climate across the continent. Notably, on a brighter note, Eswatini has already begun using the findings of the gap analysis to inform the review of its investment and trade promotion legislation, strengthen investment facilitation, and enhance investor aftercare. Now, we want to explore some of these findings and the progress that has been made in aligning the Kingdom's investment framework with the Protocol on Investment. And my guest virtually this afternoon is Martin Masilela, who is the Executive Head of Investment Promotion at the Eswatini Investment Promotion Authority. Good afternoon. Thank you very much for joining us this afternoon. I hope that you can hear me loud and clear, and we will rather be able to converse. So the findings or the gap analysis identifies Eswatini as one of the countries already using its findings to shape investment policy reforms. From the authority's perspective, how prepared is Eswatini today to implement the protocol, or rather the AFCFTA protocol on investment?
Thank you so much, Notsile. Good afternoon, everyone. I think maybe just taking you a bit back. Obviously, this is a function of the AFCFTA implementation strategy that was concluded in 2024. And as part of the implementation strategy, countries or member states of the ACFTA agreement needed to ensure that their investment framework is actually aligned to the Protocol on Investment, which is an integral part of the ACFTA agreement. And therefore, Eswatini is pleased to be part of the reform countries, those that are at the forefront in terms of harmonization of our investment legislative framework with that of the Protocol on Investments. So basically, with the technical assistance of the ACFTA Secretariat, we were able to actually do a gap analysis, which basically, seeks to identify what gaps are currently existing within our legislative framework, and also looking at some overlaps that are currently, available in our legislative framework. And thankfully, we are in the process of, we are currently reviewing our investment and trade promotion bill, as well as, the new investment policy that has just been finalized. So we're actually, riding on the fact that we are currently, preparing those pieces of legislation, as well as the policy to basically ensure that, they're aligned to the protocol on investment. We've already had some stakeholder consultation with ACFTA as well as with our private sector. So last year, December, we had the policy dialogue, which was basically focusing on the gaps that are currently existent in our legislative framework vis-a-vis the protocol on investment. So we think that maybe from a point of readiness, we actually have a bill, the Investment and Trade Promotion Bill, that is already aligned to the ACFTA, including our policy. There are some aspects that have to be taken care of or to be included in our policy as well as our bill for them, to be aligned to the ACFTA protocol on investments.
The proposed Investment and Trade Promotion Bill you just touched on is expected to modernize Eswatini's investment framework and address several gaps that have been identified in the AFCFTA. Just an update on that. What's the current status of the bill, and when soon can we expect it to be enacted, maybe into a law?
So the bill, it has actually gone through a lot of the required processes as per the legislative, process of the government. Currently is with the Ministry of Commerce, which I believe that they should be taking it to the AG's office. Of course, we just need to do a final presentation to the ministry. Otherwise, in terms of the stakeholder engagement, the alignment with the protocol on investment is concerned, we've already completed those stages. So we do have a bill that is currently in place that is pretty much aligned to the ACFTA protocol on investments. So we're looking at probably having it go through the AG's office, and then from there to cabinet before it goes, to the different portfolio committees, of the Ministry of Commerce, and then to the both houses of Parliament as per the legislative, process.
This legislation, Vunganze, how will it create a more coordinated investment ecosystem as the recommendations of the gap analysis, and what changes then should investors expect when dealing with, for example, government agencies in the country, or when dealing with multi-partner organizations when they want to invest in Eswatini?
Yes, basically, the bill, or rather the protocol on investment, as being the document, the prima facie document in which all legislation should be aligned to, set some precedents with respect to ensuring that there is transparency, ensuring that there is transparency in terms of, the investment law as well as the processes. It also wants to ensure that there is a coordinated mechanism for investors. For instance, the business one-stop shop. So it basically emphasizes on ensuring that there is coordination in terms of institutions that are facilitating investments. The boss or the business one-stop shop being one of them. Instead of investors having to go to multiple doors and knocking, for their services, it must be streamlined and be given under one roof, and that is the boss. The second thing, the third thing, apart from transparency as well as the coordination, is to ensure that there is certainty in terms of investor protection, as well as incentive mechanism. So it must be so investors within the current, within the bill that is proposed, there will be certainty in terms of investor protection, and there is an aspect that basically deals with a clear scope for investor obligation as well as the host state obligation. So those things are clearly spelled out. And number 4 is to ensure that there is a clear rule book. By rule book, we mean that all processes relating to the investment entry, processing, and the like is actually, available online. So there shouldn't be a time whereby one legislation is actually in conflict with another legislation. and hence, a clear rule book should be basically be provided. And those are some of the gaps that we've actually currently identified within our investment legislative framework that we're actually trying to address with the current bill. So issues of transparency, issues of coordination, issues of, the rule book are actually taken into account. Maybe the last one is to ensure that as we do facilitate investment, the aspect of a sustainable, development actually embedded in the legislation. In the past, probably there have been some, gaps with respect to the enforcement of, environmental sustainability issues. So the issues of ESG, that is environment, sustainability, and governance, are actually coming, at the forefront in terms of the requirements of the protocol in which the legislation has been harmonized, to conform to.
You've hinted on the key elements of the gap analysis that speak to transparency, coordination, and certainly the digitization of investment services, which was found to be a common challenge among particular countries on the continent. To my next one, Vunganze, take, for example, Kenya, that has already designated their investment promotion agencies as national focal points under the AFCFTA protocol on investment. Locally, what's the progress on that? Has APA been formally considered or designated as the country's national focal point?
Yes. So a part of the requirements, of the ACFTA has been the fact that we needed to designate a focal point for investment issues. So we've already done that, among other requirements that are still in the pipeline. So IPA has been officially designated by the Ministry of Commerce, Industry and Trade as the national focal points. I think we've received the confirmation from the ACFTA Secretariat. And of course, there are other requirements there are other requirements that we need to meet as part of that. But IPA, yes, it has been officially designated.
What strategic value does this designation bring?
It basically says that any investor coming from outside the country, first and foremost, they need to understand which gateway they need to use to enter a country. In this case, it's IPA. So basically, it all goes with the issue of coordination as well as streamlining. So once the designation has been done, now the issue of streamlining comes into place. That of having the one-stop service rendition to investors. So once the IPA or the designated entity has been put in place, then now the second aspect is to ensure that the services that are being offered are actually streamlined and there's a lot of transparency, and there are efforts to ensure that at least digitization is taken into account, and efficiency is actually considered in the continuum of service that are being offered by that designated entity. So and that enhances the value proposition to the investor, not just about the location, but also about the services that are actually given in a more coordinated and streamlined manner.
My key observation is that the success of the AFCFTA, Vunganze, depends on African countries progressing together, not individually or rather working individually to benefit from this platform. But if Eswatini modernizes its investment framework while other countries move slowly, how might that affect our ability to benefit or fully benefit from this continental market?
Yes, I think, like I said, that Eswatini is a part of the reform countries or the front runners that have been chosen, and that basically means that some countries, especially our neighboring countries, they still have that obligation as per the AFCFTA agreement to actually go the route that we've already gone through. So that basically says that we may not have, we may not fully derive the benefit, within all member states, more particularly that of improved service delivery and efficiency. What the ACFTA Secretariat has done is that they basically choose, as per the country's proactiveness, they basically choose, obviously, or rather segregate countries according to their criteria or method based on the resources they have to actually ensure that they provide the services of gap analysis and then that of policy, alignment. So in as much as we're at the forefront, but we believe that with time, other countries are going to catch up. We've given ourselves, a period of time. I think the first 5 years, has been given to countries, including, the renegotiation with the possibility of cancelling the, for instance, the intra-African bilateral investment treaties. So there's been some time frame that has been given to countries to actually align and also, to look at, doing away with the intra-African bilateral investment treaties as part of the requirements of the ACFTA protocol on investments. So we believe that probably by 2028 or latest 2030, all countries should be aligned, given the fact that, most countries, they have the implementation strategy, which include, the harmonization with the ACFTA protocol on investments.
Lastly, Vunganze, some of the recurring findings were rather the weak investor aftercare and the limited focus on attracting African investors. On that part, what indicators is APA introducing to strengthen investor aftercare?
Obviously, we are actually, looking at, institutional restrengthening. I think that one falls under the institutional restrengthening. That is basically saying, what gaps do we have? I mean, if you look at comparator countries, for instance, the likes of Mauritius, the IPA or the Investment Promotion Agency, if you look at their staffing, they are more than around about 250 versus us, we are actually less than 40. So in terms of rendering, the services that are needed for investors, we are very thin on the ground. We've done some benchmarking, in the region. Of course, in South Africa, when we do benchmarking, we use the provinces as our comparator investment promotion agencies. So there's still a lot that we need to do on our end in terms of, strengthening our institutional setup. Currently we are lacking. Within aftercare, for instance, only have one officer and a manager that are basically, offering those services. And I don't think currently, we have sufficient, resources as well as personnel to deliver that. But that is being considered in our new strategy in terms of, boosting the key account services. And of course, we do want to, within our new strategy, we do want to segregate, we do want to segregate the service rendition, maybe to look at having, some means to ensure that at least all the investors that are within our database or that we are supporting, get sufficient services. So that is part of our new strategy. We believe that, if we are able to harness the resources that we need, we should be able to, effectively deliver on the aftercare support services to our investors.
Pongaze, we live here. Thank you very much for talking to us. That was Martin Masilela, Executive Head of Investment Promotion at the Eswatini Investment Promotion Authority. And we were discussing just some of the strategies or the Eswatini's readiness to implement the AFCFTA protocol on investment and also the findings of a recently completed investment gap analysis across different African countries. This is Nedbank Business Watch. The show continues after this.
Hi, I'm Alex. Here's a riddle for you. What can you own but never hold? Let me show you. Welcome to cyberspace, home to a lot of the things that we use in our daily lives. Games, videos, and so much of our data. But also, here it is, crypto assets. You've probably heard of a few, maybe Bitcoin, Ether, or others. So what am I driving at here? After the global financial crisis, trust in banks was at an all-time low. Crypto assets were created as an alternative way to make payments, democratizing and decentralizing finance. Basically taking power away from banks and putting it in the hands of the people. The idea was that they were going to fundamentally change the world of finance with their decentralized ledger technology, the blockchain. So, what's the catch? Without backing assets or a central authority, crypto assets seem to be really volatile. That's great if you want to gamble, not so great if you want to pay for something. Because how can you really pay for something with an asset that isn't a stable store of value? Enter the stablecoin, a crypto asset built on the blockchain, but usually with a centralized issuer. While the value of crypto assets like Bitcoin is determined by supply and demand, stablecoins aim to have value by being pegged to another asset in one of two ways. The first is by backing the stablecoin with another asset, like the dollar, the euro, or even a commodity like gold. In theory, keeping a one-to-one parity. But wait a minute, doesn't this go against the founding premise of crypto? Maybe, but it also allows users to stay in the crypto universe without all the volatility. The second way stablecoins try to maintain value is through an algorithm, a formula that automatically raises and lowers the total number of a given asset in response to supply and demand to keep the price at or near par. One danger with stablecoins is market shocks. If prices begin to fall too quickly, or users lose faith in the ability of the stablecoin to keep its desired pace, everyone could try to sell their stablecoins all at once, dropping their value almost overnight. There are a few famous examples of stablecoins that have crashed over the years. Some people lost all their savings after relying on something they believed had a fixed value. So, is this the end of the stablecoin story? We can't really be sure. Some still see the promise. They think that stablecoins have the potential to increase access to financial services and become a viable payment method. But for that to happen, there needs to be regulation to prevent fraud and crashes and to protect users from abuse. Before imposing regulation, authorities will look at how people are actually using stablecoins, whether it's for payments or something else. Some authorities are looking to regulate the bigger stablecoins the way they do banks and other traditional financial institutions. Now, here's the real riddle. If these stablecoins are regulated like banks, don't they end up becoming the banks that crypto assets were meant to replace?
Welcome back. I'm moving on to this now. Despite the global tensions and challenges facing the world economy, Eswatini Sugar has recorded an increase in revenue, generating 8 billion emalangeni, up from the 7.7 billion emalangeni recorded in the 2025 financial year. Now, what has driven this growth despite the challenging global economic environment, and what does it mean for the future of the sugar industry? Eswatini Sugar Association Chief Executive Officer Banelenya Mane joins us via video link to unpack the factors behind this performance and share his outlook for the industry. CEO, good afternoon. Thank you very much for your time. So some of the challenges do include exchange rate fluctuations, rising input costs, among others. This 8 billion emalangeni revenue, has it translated to, well, positive news for especially local growers?
Good afternoon to the viewers at home. Unfortunately, it hasn't translated to positive news for the growers and the millers in the country. Whilst we have recorded an increase in revenue, a major factor of that is that about 55,000 tons of the sugar sold in the current year is a carryover from the previous year. Our key measure in terms of whether we've done well for our members or not is what we have distributed to them. Last year, we distributed 7.3 billion emalangeni. Unfortunately, this year, that has gone down by 8%, so we're only able to distribute about 6.7 billion emalangeni. So in short, that means that the members of the industry have seen a decline of about 8% in terms of their earnings.
If the member earnings is really not your key metric, but I mean, you are reporting 8 billion emalangeni in revenue compared to a 7.7 billion emalangeni reported last year. Is this not really something to celebrate?
Unfortunately for us, not. As I indicated, that a part of the 8 billion emalangeni included tonnage from last year, which the members were already paid for. But I think I must say, we do take pride in that our performance, whilst we're not generally happy with it, we are still far better than the other players in the rest of the rest of the world.
Regional comparison, I see. What was really behind the growth?
Okay. So in terms of the growth, it was mainly the volume of sugar sold in the current year, which increased by 55,000 tons malangeni. 55,000 tons, and then that resulted in the 300 million increase. That is despite the fact that our price per ton globally decreased by about 2,000 emalangeni due to the global dynamics, as we have indicated before, that the sugar price has gone down significantly over the past 2 years.
The report notes that nearly 200,000 tons of cane were left unharvested because of prolonged rainfall. What lessons has the industry learned from this, and what changes do you think can be implemented to prevent a repetition?
What the industry players are currently doing at the moment, mainly the millers, is just to try and increase their milling capacity so that we are able to crush the sugarcane within a short period of time. So in terms of the physiology of the sugarcane plant, its optimal growth of benefit is between the months of May and November. So to get the optimal production, you need to try and crush it within that period. So to try and alleviate this problem into the future, we are trying to relook as to how we can try and increase the milling capacity to be able to achieve that within a short period.
Reportedly, as global sugar prices fell to a 5-year low, how do you then reconcile higher revenue with lower international prices?
So it's basically the volume that has increased in terms of what has been sold. So in an ideal world, the significant increase in the ton of sugar sold should have yielded a revenue much more than the 8 billion emalangeni, which is why we are saying overall our members saw a decline in terms of their efforts and the benefit declining by 8%.
We note that the SACCO market accounts for about 72% of sales by the Eswatini Sugar Association, and at the same time there is a warning about increasing imports and pressure from cheaper global sugar. How vulnerable is Eswatini if this trend continues? Is it really something that could harm outputs? Is it something that could harm the industry?
It is definitely something that is a negative for us. I think if you look at our cost, our finance cost increased significantly. One of the reasons for that was that our movement of sales in SACCO was not at the rate that we had projected, purely because of the imports that were now displacing our sugar in the market. I think we've highlighted before that because this is our key market, we are doing everything to make sure that it is protected, because between Eswatini and South Africa, we've got enough production to supply the SACCO market. So there's really no need for imports to be opened into the region. But unfortunately, because of the current price dynamics, we see other players like Brazil and India now dumping their sugar into our local markets, hence putting pressure on us. So we are putting more effort to make sure that we can protect the SACCO market.
Africa remains Eswatini's biggest trading partner across various sectors in terms of services and goods. They have seen uncertainty surrounding what is called Tonga Hullet, and at the same time imports into SACCO are actually increasing. Does this then create more risk or opportunity for Eswatini?
So I think we've touched on the issue of Tonga. I think we've said before that as Eswatini, we desire, and it is in our prayers, that Tonga survives. We need Tonga to survive because the refining capacity that they have and what we have is adequate to supply the SACCO market. In an unfortunate event where Tonga were to eventually collapse, we will not be able to fill the gap or the void that they will create in the market. And that will put us under pressure in terms of now opening up to the rest of the world. And our experience is that once the market is fully opened up to other players, you then become vulnerable to those countries that are now dumping their sugar into our local markets. So we do pray and looking at the positive results, because at the moment it looks like the government of South Africa has taken the right steps to make sure that Tonga survives. Those efforts also then spill over to us, because when that support is given, it's not given only to Tonga but to the entire sugar industry in the SACCO market.
Mr. Nyamane, the strategy by Eswatini Sugar to move away from exporting raw sugar towards higher value direct consumption and specialty sugar. Let's get a bit into that. How far along is this transition, and do you see it making a meaningful difference in terms of revenue?
It has made a significant difference. If you can just highlight to the viewer at home that the margin of the difference between the price that you will get for the direct consumption sugar versus raw sugar can be as high as about 3,000 malangeni. So we have done enough or significant investments. I think 3 years ago, we built up a massive plant at Bombo to be able to pack into direct sugar. There was also another exercise to expand our packing capacity in the Mhlume area. So we are now at a position whereby we have eliminated the undesired raw sugar that was being sold at lesser prices. So we've geared ourselves to benefit from the markets that consume direct sugar. The strategy also highlights the fact that our next focus, or our key area of focus, is on specialty sugars. So if you get to the markets like the EU, there are many countries supplying brown sugar. but there are different varieties of the brown sugar, and you tend to get more money for specialties like what we call demerara. So that is our next focus, to make sure that we are able to produce those different specialties. The other specialty that we have as a Eswatini sugar is Nucane, which we have also rolled out into the local market. We've been able to secure the patent for that for the southern part of Africa. So that also positions us in terms of being able to fulfill the market whereby other people are looking for much healthier products. So by those actions, we have positioned ourselves for success.
You constantly say that you are, of course, on the hunt for new markets, and recently we think we bagged a trialed sugar exports to the United States. If that's correct, you can correct me on that one. How important is market diversification in reducing dependence on traditional buyers or the clientele that we've known or gotten accustomed to for so long?
So it is important for us to diversify. I think about 2 weeks ago, we were speaking about the challenges that we're facing in Kenya, whereby they've suddenly introduced a duty. So the industry about 5 years ago took a position to say will always be vulnerable if we focus on a few markets. So we are trying to set up the industry such that we are more versatile in terms of being able to address or supply all the different markets in the world, so that if there's if there's a challenge in one market, we can then be able to switch our product into the other. You speak about the US. So in the US as well, traditionally we've been sending a bulk sugar, but we've discovered that there's a niche market whereby if we were to supply the sugar in paper bags for direct consumption, you will definitely get a much higher price. Those actions in terms of getting to special products also guarantees you in that you then start to deal with manufacturing customers who don't easily switch between two suppliers. So that makes you compete better, because you know that you've got a dependent relationship with that particular buyer of your product in that market.
So from 8 billion in growth revenue and margin pressure and the need for cost or disciplined cost management, when you look at the industry, is it financially stronger today than it was a year before the current reporting year? Or we're just adapting at this point, we're being resilient?
I think if I can summarize it, is that we had a difficult 2025. We are going to have a challenging 2026. But looking forward to 2027, we are seeing the green shoots in that the returns to the industry should start increasing by much higher than inflation. I think just to highlight that whilst the global sugar industry has faced significant challenges, the impact to Eswatini has been minimal because of the good decisions that have been taken in the past. You will see in the report that we are still ranked as one of the most best efficient producers in the world. So that helps us in scenarios like now, whereby the sugar price comes down, in that we are still able to remain marginally profitable compared to the other players in the world.
Okay. Can we wrap it up, Mr. Nyamane? So we are talking about an industry that contributes 4.1% of GDP and is one of Africa's third largest sugar producer, that is the Eswatini sugar. That is, given that level of economic importance and contribution, what growth targets has the industry set for the year, financial year 2026-2027?
So our target for the next 5 years is to increase our production up to 950,000 tons per annum from the current 700,000 odd that we are producing. I think if you see the development that is happening in Lucid 2, it is at a mature stage now. We are continuing our support in terms of increasing our research capabilities, because land is not growing. So how you achieve growth is then to get maximum harvest from the little piece of land that you already have. So our key focus for the next 5 years as well is to try and come up with sugarcane varieties that can yield more sugar from the single stick of cane.
Mr. Nyamane, thank you very much for your time. That was Eswatini Sugar CEO Banele Nyamane chiming in on the report released by Eswatini Sugar for the financial year that ended March 2026, where Eswatini Sugar recorded 8 billion emalangeni in revenue, which is growth has gone up from 7.7 billion emalangeni in that other previous year. The show, Nedbank Business Watch, continues after this. Was back with the analyst for the latest in markets.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
All right, welcome back. This is the final segment of today's episode. Thank you for staying with us. We're now joined by Toba from Nedbank Eswatini for today's market analysis. Toba, very good afternoon. Thank you for coming through on Nedbank Business Watch. So what's happening in the world of markets? Yesterday, U.S. inflation report was released. Has it moved markets in any way?
Thank you, Lulu, and good afternoon to you too. So yes, yesterday the US released their CPI number. So it came below market expectation at 3.5%. Market was expecting 3.8. So we saw the dollar weakening because of that. Because then that means, rates are then likely to be not increased, or rather bets of a hike were sort of reduced because of that. But it has since bounced back today locally, though it hasn't really covered the same ground that it did before the announcement yesterday because of the escalating tensions that we continue to see between the US and Iran.
Yeah, speaking of the escalating tensions, Toba, has the price of commodities increased, because of that?
Yes, so we've seen oil gone up to over $80 per barrel. So that is, we were not so long ago after the announcement of the agreement at around 60 odd dollars, but we're now at 82.38 per barrel, a significant jump of 2.2% on that. So we continue to see that escalation with the US reimposing closure of some Iranian ports and Iran saying that they're going to block exports that benefit the US and its allies. So that has seen the price of oil jumping significantly, likely to continue in that trajectory for a while until we see some sort of resolution. Gold, on the other hand, down 0.65% at $4,028.60 per ounce. So that is due to the tensions, because there is an inflationary effect of those tensions. If the price of oil goes up, then it means price of goods and other household services is also going to go up, which will then push inflation. And if inflation goes up, then it means rates are likely then going to be hiked in the US. So that means then holding gold becomes less attractive for investors. So that escalating tension has hit the price of gold. But not as bad, 0.65%. We continue to monitor and see how that goes as well.
All right, so moving on to the Lilangeni versus the US dollar. Let's see how that is performing this afternoon.
All right. So the rand Lilangeni is performing quite steady. There's just minor jumps, 0.03% against the US dollar, 0.44% up against the euro at 18.7063 and 0.73% against the GBP as well. So that is due to there isn't really much happening in South Africa that sort of moves the needle in terms of the performance of the rand or Lilangeni, but it's more taking cues from what is happening internationally. So it is due to the dollar weakness that we saw from yesterday when they announced inflation. And that's likely going to be the trend for the week. It's quite a quiet economic calendar in South Africa this week.
Okay. So moving on to equities this afternoon, Toba, what's happening? Take us through.
Yeah, so with the equities, the S&P 500 doing quite well, 0.3% up at $7,543.59. That is due to good performance that is coming out of companies in the US. In particular, we've seen banks reporting their second half earnings, and they're coming in quite well. I think yesterday we saw the Bank of New York reporting solid numbers that show or project that they're likely going to end the year at 10 to 11% growth by December. So it's still early days. We're still seeing those earning reports coming through. So if that continues, then we expect to see the S&P 500 or companies in the US continue to, gain a bit of strength. And then the FTSE is at 10,507.38, down 0.21%. The biggest contributor to the decline is mining. So we've seen quite a number of mining company shares going down in the UK, but that has been countered by the positive uptick in the price of energy companies as a result of the increase in the oil price. So, but that net effect, net on net, it is showing a negative decline in the index.
All right. So based on today's market moves, Toba, is there anything that investors should watch out for this week?
In South Africa, I'll start there. There isn't much, as I've mentioned. But in the US, we do have producer price index coming out later today. So that's about, I think, 8 p.m. or 7 p.m. our time. For further clues on what the Federal Reserve Bank is likely to do with interest rates. So it goes hand in hand with the consumer price index that we got yesterday. But other than that, I think markets and investors are sort of just watching closely the tensions in the Middle East. That is the biggest elephant in the room that everybody's sort of, just waiting to see how that goes. Otherwise, it is a quiet week overall in the economic data space.
All right, thank you, Taba, for that analysis. It's 4 minutes before 3. We wrap up our segment. We come back with Notilia to wrap up the program. Stay with us.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Minutes before 3 p.m. It's been lovely having you on the show for the past hours. Lulu, I'm just remembering how we got in, or the show kicked off earlier than usual.
Yeah.
Realizing, we really couldn't wait to see
But
them.
it's 2 minutes before, and now it's 2 minutes before.
And now we gotta go.
Yeah. All right. Thank you for joining us this afternoon. And if you've just joined us, worry not. You can still watch this episode on our YouTube page, Eswatini TV. Other than that, we'll see you next week, Wednesday, at exactly 2 p.m.
Goodbye.
Make better money choices. Choose a bank that takes your money seriously. Business Watch was brought to you by Nedbank.